Hey everyone, and welcome back to the channel. Are you tired of feeling like you're just guessing which way the market is going to move? One day you're up, the next you're down, and it feels like a total coin flip. Well, what if I told you there's a way to stop guessing and start making more informed decisions? It's all about learning how to read market sentiment. Think of market sentiment as the collective mood of all traders and investors. Is the crowd feeling optimistic and buying everything in sight? Or are they pessimistic and selling off? This overall feeling is a powerful force that can drive prices, sometimes even more than the underlying fundamentals of a stock or an asset. It's the vibe of the market, and learning to read it can give you a serious edge. So, how do you actually measure this vibe? One of the classic tools is the Fear and Greed Index. This index looks at a bunch of different factors, like how many stocks are hitting 52-week highs versus lows, the volume of trading in bullish options versus bearish options, and even the demand for safe haven assets. It then combines all this data into a single number, from extreme fear to extreme greed. When the index shows extreme fear, it can sometimes signal that the market is oversold and a buying opportunity might be near. Conversely, when it shows extreme greed, it might mean the market is getting a bit too frothy and a correction could be on the horizon. Another powerful tool is the put-call ratio. This one sounds a bit technical, but the idea is simple. A put option is a bet that a stock's price will go down, while a call option is a bet that it will go up. The put-call ratio simply compares the trading volume of puts to calls. A high ratio means more people are buying puts, suggesting a bearish or negative sentiment. A low ratio suggests the opposite traders are feeling bullish. By watching the trends in this ratio, you can get a real-time pulse on whether fear or optimism is starting to take over. But it's not all about charts and numbers. Social media and news sentiment are huge now. Think about it. A single viral tweet or a major news headline can send waves through the market in minutes. There are platforms that analyze the language used on Twitter, Reddit forums like Wall Street Bets, and major financial news outlets. They scan for keywords like bullish, crash, buy, or sell to gauge the general mood. If you notice a sudden spike in positive chatter about a particular sector, it could signal growing interest. On the other hand, a flood of negative news could precede a sell. Keeping an eye on what people are saying is like having a digital ear to the ground. Now, here's the most important part. No single indicator is a magic crystal ball. The real skill is in combining these different tools. For example, what if the Fear and Greed Index is flashing extreme fear? The put-call ratio is unusually high, but you also see your own technical analysis showing a potential support level. That combination of factors tells a much richer story. It suggests that while the crowd is panicking, there might be a solid technical reason for the price to bounce. You're not just reacting to one signal. You're building a complete case for your trade. Reading market sentiment is a skill that takes practice, but it's one of the most valuable you can develop as a trader. It helps you move from being a reactive participant, swept away by market waves, to a proactive strategist who understands the currents. Start by picking one or two of these tools. Watch how they behave, and see how they align with market movements. Over time, you'll develop an intuition for the market's mood. Thanks for watching, everyone. If you found this helpful, make sure to hit that like button and subscribe for more content to help you trade smarter. Let me know in the comments which sentiment indicator you find most useful. See you in the next video.